Hi YouTube, it's Janelle here. Lots of you guys have been asking me in the comments to explain investing and talk about how I invest. Now, I've mentioned that I invest in the stock market before on the channel, especially talking about my retirement investing, but I've never really gone into specifics about the stock market. So it's obviously, makes sense that people are curious to hear me talk about that. So before I jump into the video, I just want to quickly plug my Patreon page linked in the description box below. Please go over to the page and check it out. Consider pledging $1 a month if it's in your heart and in your budget to give that. It would really help me out to continue to create content on this channel. Okay, so let's jump into talking about investing. I mainly want to talk about the difference between stocks and bonds because those are the two main, I think, popular ways that people invest money besides like real estate or even opening your own business. I think stocks and bonds are two pretty popular terms that people hear, but maybe don't always completely understand what they mean. So in order to understand the difference between stocks and bonds, you kind of have to rewind a little bit and think about a business or a company. In order to operate, a company or a business needs money to kind of have day-to-day operations, in order to be able to purchase things that you need, or hire people to work for your company, whatever it is. And so there's two ways that a new business or an existing business or company could get the money that it needs to be able to operate. And so the first way is to borrow that money. And that would mean that the company or the owners of the company will be going into debt. That means that they're borrowing money or taking a loan from the bank or from an investor, a person or people that they know. Basically, they're coming up with some terms and they're saying, you're going to lend me this money and then I'm going to pay it back to you later. And the idea there is that whoever's lending the money is hoping and expecting to make some profit later when they get their money back. Now, another way that a business could raise money is by selling parts of the company, which is called equity. And that's what we think about when you hear the word stocks. A stock is literally giving somebody a piece of your company. So the business owner would basically be saying, I'm not going to be 100% the owner anymore. I'm going to give little pieces of my company away to different people so that they can own some of it too. And I'm going to sell those pieces. So if you want to be part owner of my business or my company, then you would pay for a little piece of it. And so the big main difference here is that if you are the kind of person who wants to be a lender, if you want to lend somebody money and trust that they're going to pay you back later and you're going to make a profit later eventually, right? But you have to wait it out. There's not a lot of risk in that because there's a contract and the person is pretty much going to they're going to be held responsible to the terms in the contract because you both signed it, right? That agreement. And so being a lender is really not as risky as, being part owner or being owner of a company or a business. And so the thinking there is this business could do really, really well, or it could do really, really poorly. I mean, who knows? You can't tell the future. Maybe right now the business is doing really well, but in another month or two or in a year or 3, 4, 5 years, people just stop going there. Maybe, people just don't have money and all of a sudden people just stop consuming or people just stop buying or they stop going to your company or your business. Or maybe a business comes up that's even better than yours. And so then people stop using your service or stop buying your products. So those are all possibilities. And because you don't know what's going to happen, you're taking on a lot of risk when you choose to be part owner or owner of a company. So if you have stock in a company, if you buy stocks for a certain business or company, you're taking on a lot of risk. If the company does well, yes, you will do well. But again, like I said, if the company doesn't do well, then you're, risking that you might lose the money that you use basically to buy your stock. Or that you're going to, either lose all of it or maybe even just lose some of it. But you're expecting that the business will do well and that you'll do well, right? And that's the hope. But again, there's a lot of risk here on this side with the stocks because, again, nobody knows. You can't predict the future of a company perfectly. Like you can make a prediction that is an estimated guess, educated guess based on what you know about the company and the people running it. Maybe they're really smart and really organized and have a lot of energy and passion around the work they're doing. But all of that is never a guarantee. I would say decide for yourself if you want to lend a company or a business money and know that, on the date that you signed, basically it's called the date of maturity essentially. So when you get that when that loan matures or that bond matures, you will get back what you lent them and some profit, right? Or you could think of it as interest. And so you'll make money in some time. Or if you want to be an owner, if you want to own the business and take on all the risk, but that also comes with the chance that if the business does really well, that you'll do really well, right? So there's more risk, but also you could get a lot more money from that. If you want to be an owner, then obviously you would invest in stocks. And if you want to be a lender, then obviously you would invest in bonds. And I would say that, it just depends on where you are in life or what type of person you are or how much risk you can take on or are willing to take on. Those are all things that you should think about when deciding if you want to invest in bonds or if you want to invest in stocks. But yeah, that's pretty much all I have for you guys. I hope that helps you understand the main differences or the big difference there is between investing in stocks and investing in bonds. If you have anything to add or any clarifying questions, you can put that in the comments below. And if you have anything that you would like to write to me privately about, you can do that at MissBeHelpful@gmail.com. Till next time, peace.